Exit poll results over the weekend mean that we're going to start, according to the GIFT Nifty, with a 3% pop.
The results are clearly showing that there's going to be policy continuity.
On the capex theme, we went bullish about 3 years back.
Who cares whether it's 340 or as long as it is more than 272.
The important thing is to understand that this is an absolutely unprecedented time.
Markets are trading and the verdict is clear. It's a new all-time high, 23,300 plus.
People are sitting on cash or people are waiting to deploy. How do you do it?
It is quite encouraging to see the kind of GDP numbers which have been seen.
ICICI Bank from July of 2017 is the top performer on the Nifty Bank.
We have signed a MSA with MHD on the 31st of May this year.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's a day so far, and it's turning out to be really powerful green kind of move. Up and up is the word, and what can we say? A day to remember. Lots to track here over the next 60 minutes, but I think a lot of conversation over the next 60 minutes will also be about what to do tomorrow, because there is also tomorrow the actual results. And based off of these moves, can we continue to do something even bigger? Will it be meaningful? Or today is it? Is today 80% of this sort of post-election move? So a lot of that conversation will follow. I'm Prashant. With me, my colleagues Surabhi and Reema and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. I guess, Nigel, you hit Prashant, you hit the nail on the head, right? That whether today is it or whether this is just a precursor to something bigger, I guess, that's what the guessing game is all about. Whether we've priced in this verdict or not, the verdict that we'll get to know tomorrow.
And I think that is the number one question, because, that will also sort of tell you whether, how far to go, how far to push it if you're trading, what kind of positions to take, risk appetite, all of that, right? And we'll sort of discuss this with our guests here as we go on. But just a few points. So this is the exit polls over, and we were anticipating a 3% kind of a move. We've got exactly a 3% move and it's holding so far. So, 700 points. Mid-session, there was a bit of a wobble. Not wobble, but the market came off a little bit. But, it's picked up right up. Nifty, of course, as a result, has broken out of this consolidation zone. It's been in all through 2024. If you take a simple equality level of the last up move and project it higher, on the Nifty, you get to about 23,742, which is not very far away, by the way. We're at the day's high, you were about 300 points away from this level. So is there life beyond, in the very near term, above the 23,700 kind of levels? I thought, this week, in aggregate, it could be like a 1,000-point week for the Nifty. So we'll see. But Bank Nifty, similar kind of projection, gets you to about 52,082. That's for the Nifty Bank. Private banks are not doing very much, but they were not really expected to do very well. It was the PSUs, and SBI is really leading the charge there. I would say, and we'll discuss this more, but tomorrow can also be a meaningful day, depending on, of course, the actual numbers which we get. If the actual numbers match up to what the polls suggest or even better, then I think tomorrow can be meaningful as well. On the other side, I think we don't want to talk about it, at least not right now. Reema.
Well, so the question also is that after this 1 day or 2 day adjustment, right, even assuming tomorrow we get some sort of a reaction, what happens in the next 6 months for our markets? Well, today, it's all about banks. Banks are doing well. PSU banks leading from the front. State Bank of India has overtaken ICICI Bank to be the second most valuable bank. So now its market cap has crossed 8 lakh crore and it's just second to HDFC Bank. That's been a big mover, State Bank of India. The other one has been Reliance Industries with a 5.5% gain leading from the front, and Adani Group stocks, infrastructure stocks, PSU stocks, all of them doing well. So Adani Ports should come up for you, top gainer on the Nifty, and it's a double-digit up move. All the sectors, needless to say, are in the green. The ones which are lagging have a gain of about 0.5%. We're talking about Nifty IT and the Nifty Pharmaceutical Index. So these are the relative underperformers, and they too have a gain of close to about 0.5%. But PSUs, right? Just pull up that Nifty PSC Index, 8.5%, 9% up on that. What a day. What a move.
I was saying this in the morning, I'll repeat it now, that the saying goes, never bet against the house, right? And right now the market believes this is the same house that's coming back. And look at the move in PSUs today. And this is after a rally of 100%, 120, 130% at the index level, mind you. Whether you're looking at PSU banks or PSC or the CPSC index, all these indices in the last 12 months have rallied big time. And yet you get a 7-8% pop on exit polls. The question is tomorrow, what happens tomorrow? And there will be a couple of scenarios. We'll do, of course, the scenario analysis with our guests as well. But if you have something around 300 to 320, then can there be a sell-on news given the moves that we've seen today? If the numbers are higher than 320 thereabouts, will there be follow-on buying? I mean, who's to say? These are big questions at this point in time. But the fact is that a lot of people were hoping for an intraday dip. A lot of people, I remember Sudarshan saying this in the morning as well, that, use the dips to get in. Well, guess what? There's not been any meaningful dip today at all. It's been rock steady and solid, as you can see on that chart on the screen. So no dips. Nigel, those who were in last week, they're all in, they're happy. But I guess for others, it's been a little tricky trying to join in the party late.
Well, that's right. I'll have to see how much of the good news is priced in if we end around these levels of around 23,250 approximately. But a couple of stocks are actually catching your attention in the last few minutes. Concord, maybe the street believes that this is it. Now, in this term, that divestment gets pushed through. So that one is up closer on 9% as we speak. Naveen Florian, there's a new head at the top, and Sonal will be joining in to address that piece of news. And take a look at DLF. That one's up closer on 7% as we speak. So massive move out there. And the last one I'm looking at is Balrampur Chini. Remember, there's a bit of a regulation in place with regard to ethanol. And, at some point of time during this fiscal, if there is some kind of leeway that comes out there or some kind of concession or some kind of, pulling back that restriction, then in fact some of these sugar stocks will be in focus. So that could explain why Balrampur Chini as well is flying off currently at the high point of the day. Well, how do you position yourself though for the final hour of trade? Kush Pora joins us. Hi Kush. Well, I think the smile is a little wider today. Just take a look at the markets flying away as we speak. The Nifty Bank as well on the verge of going to around 51,000 odd. The tricky part is, what do you do from here? Take money off the table and enjoy the gains, or trail your stop loss? If yes, what's the level you should be trailing your stop loss at, both on the Nifty and the Nifty Bank?
Hey, hi, Nigel. The smile is wider, but there's also a sense of relief. On Friday, I stick my neck out and said that, go long on futures and buy a protective put. Luckily, whoever would have done that would have been making some money. To answer your question, whether you, continue to hold, book partially, what do you do? I think I'll take a leaf out of Surbhi's book. She just mentioned, a very interesting line, which is never bet against the house. And just recently, the biggest voice in the country, about a week or two ago, we heard that perhaps when the results are announced, all the programs will go for a toss and the markets could perhaps rally from there on as well. So taking heart from the fact, from that line, and also the fact that there has been no dip. This is showing the confidence that the market has. What I would suggest is take some money off the table, but leave some positions hedged for tomorrow as well. Don't be surprised to see another similar kind of a move on the Nifty, on the Bank Nifty as well. So, from, let's say, near-term perspective, 23,500, 23,800 are the levels to watch for on the Nifty. On the Bank Nifty, you could have 51,200, 51,500 as well. So how I would play is, if I had multiple positions, I would book some partially and hold the rest for tomorrow. If I didn't have any, I would go out, buy futures and do the same strategy, buy a put option just in case.
What about stock picks, Kush? What would you recommend today?
Well, I think the PSU theme is fairly evident, fairly well known. So I think I'll go a little out of that, out of that comfort zone. Kirloskar Oil, now we're focusing on stocks which were about to do well, but just were holding back because of the result and, the market rally, taking some pause. So Kirloskar Oil has shown some strength on Friday today, continuing from there on. I think from a near-term perspective, 1355, 1400 are the levels to look at. 1280 is a stop loss. CDSL, let's not forget that, this is also a theme that will benefit going forward. So from a near-term perspective, 2225 and 2295 are the targets. 2100 is a good level to put your stop loss at.
Okay, thank you very much for that. Dipan Mehta, Director of Elixir Equities, is with us on the show. Dipan, afternoon. Would you put a number to the impact of today's event, assuming tomorrow also plays out as per the script? We already have a 3% plus rally on the Nifty, about 8% odd on PSU stocks. Would you be able to put a number? How much more to go?
Oh, yeah. Good morning. Sorry, good afternoon. And that really is a bouncer to start with. You can't put a number to these things, when there is a rally, there's a bull market. Bull market sees no highs, and bear market see no bottom as well. It's only in retrospect you come to know what the high was. All I can say is that if the numbers come through as per the exit polls, even then you should expect some sort of a correction. I'm pretty convinced that you could have a sell on news kind of a syndrome playing out over here, and a lot of the upsides have got captured for the time being. There's a huge gap up, and these gap ups do tend to get filled up. So right now there's euphoria, there is short covering, there is additional traders taking positions who had gone light into the event. So all of that has got played out in a few hours. But end of the day, I think you will see some kind of market coming back to a little bit of its normal level over here and see some sort of a correction, which may or may not be a buying opportunity. But right now, I think it's just complete euphoria which is being seen on the screen, and one can't really say when this will end.
Okay, all right, Deepan, stay on. We have lots to talk about, lots of ground to cover. Let's actually start getting you a lot of the opinion that we've got through the course of the day. Lots of market opinion, and we'll get to that, but also a big face from the Indian banking sector, and I'm talking about none other than the SBI chairman. Now, the Reserve Bank of India may cut interest rates starting October, and the effort will be made to, of course, also improve the net interest margin, that is SBI's own interest margin, as we're looking at perhaps a reduction in overall borrowing costs. That is the word coming in from none other than Mr. Dinesh Khara, Chairman SBI. He was speaking to us from the sidelines of the Bank of America Securities India conference. Take a look.
Our effort will be to see that whatever improvement we can achieve in the NIM, we'll certainly do that. So, but yes, of course, it keeps on evolving. There are multiple factors which have an impact on the NIM. But yes, of course, what you mentioned in terms of the bond yield coming down, lowering down. So that is something which will certainly have a positive impact for a bank like us. We will have to wait and watch. My sense is that when it comes to the interest rate cut from RBI, it will be a function of the inflation trajectory. And the way it is evolving, it appears that maybe in the quarter commencing from October, maybe there could be some kind of interest rate cut.
All right, that was Mr. Khara on a whole host of issues, including, of course, policy, political continuity, and what lies ahead for SBI itself. Deepan, what a day for banks in general, but PSU banks and SBI hitting historic landmarks, 8 lakh crores in market capitalization, huge move today. Again, what should the approach be? I mean, if you've already got the stock, you're absolutely loving it. What about new investors or investors who don't have exposure?
I think that somehow investors have to get higher exposure to public sector undertakings, banks, engineering companies, defense, across the board. Now even oil marketing companies also will come into play over here because it's all about these PSUs, their performance improving, their productivity levels improving, them getting more autonomy. And banks like SBI really are, in terms of valuation, they are attractive if you compare them with private sector banks. And now the performance also is closing the gap with the large private sector banks. And with the economy picking up the way it does, I think clearly SBI, with the strength of its balance sheet, network, technology, is going to be a major beneficiary of any upswing in economic and industrial activity and capex cycle. And investors still looking for good quality stocks at reasonable valuations, I think SBI comes certainly to mind, which is why I think the stock can rally even higher from these levels. And maybe at corrections, one could look at going more towards the PSU banks at the expense of maybe some of the large private sector banks.
Hi Deepan, good afternoon. What a day, right? I mean, any kind of small dip is getting bought into, but I think now the street is coming to terms with the next 5 years or so. And some of those divestments didn't really take place in the last, 2 years or so that we were hopeful that, say, a Concord goes through. Concord is now up close to 10%. The fundamentals of the business itself are improving. The management is guiding for good things. Remember, last year they couldn't achieve some of that guidance. But the stock is up 10%. What do you do with this name at around 1,150 odd?
Yeah, good afternoon, Nigel. I would have looked at Concord in positive light, but the numbers really haven't come through, I mean, lots of positive factors going, like the dedicated freight corridors, which they have set up, and a lot of progress has been made over there. And there's supposed to be more and more use of railways for transportation internally. Exim trade also is supposed to play out very well. But when you look at the quarterly numbers, last 3-4 quarters, they have been a bit disappointing. And right, maybe up till the elections or so, even the scope of taking it private also was now getting discounted. So yeah, sure, if the company is getting privatized, that could be a buying trigger. But just because of that, to buy into a Concor, I don't think that's a good strategy at this point of time. But coming to your specific, what topic you raised, that divestments, not necessarily divestments, but where the government has got a very high holding, 70% plus. Those companies certainly they will look at selling minority shares so that they can raise resources for further investing into infrastructure. They could be done through follow-on public offers or private placements. Maybe not so much strategic sale, but that's something certainly that investors and the street can look forward to, is more paper coming through from the public sector enterprises so that the government gradually reduces its stake. And these are great levels to do such follow-on public offerings. Also, these stocks are not really cheap anymore as they were about a couple of years ago or so. And the government can raise phenomenal resources which can be used for investing in infrastructure.
Deepan, so again, we start talking about what can happen, right? Next, what could be the focus? Now, can housing be a focus? Is it possible? And I'm coming to you from the prism of housing finance companies, which sort of compared to, say, other financial services companies, banks, etc., are trading at even more reasonable multiples. So as someone said, jal ho gaya, nal ho gaya, ghar. We actually had these schemes, right? Urban housing mission, the rural housing mission, there was that interest subvention, etc. But could the focus come back in a big way? Just your thoughts. Stocks are not expensive. That's the starting point. That's why I bring this to you.
See, Prashant, end of the day, housing has a lot to do with state governments also, because building housing colonies, residential projects, and all the kind of problems over there are to do at the municipal level and at the state government level. At the central government, all you can do is offer some more tax incentives for people buying their houses. That's about it. But actually, apart from that, there's very little that the government can do. Because if you have to reduce the number of permissions required to do a redevelopment or to go for low-cost housing, those are things which only a state government or a municipal government can do so. And that I think is one of the biggest challenges when it comes to housing, that the actual construction, the construction cost, the permissions required are so enormous that kind of slows down the sector. But yes, I think anything which is of importance to the general public will be the focus area of the new government. But my sense is that the government will focus more on some of the more troublesome issues. They want to really get into a higher industry zone, more and more industrialization. So the policy will be focused over there, especially labor policies, land acquisition, and some of the other kind of impediments which are there to grow the industrial base of the country. I think that will be the top focus area of the new government.
Another viewpoint we've heard is maybe also a little bit more focus on consumption, perhaps, right? So we had Pankaj Tibrewal in the morning, he was making that point. So look at all kinds of companies which are now again, they've not done very much for a long time. So the idea is, at least to some, if you're taking a slightly longish kind of view, not to look at where prices are now, but try and imagine what can happen over the next couple of years. So is that something you'd look at? Or you'd still stick with capital goods, manufacturing, power equipment, those spaces?
To be completely candid, Prashant, when I look at our portfolio and many of our clients, we are still a bit underweight all of these, investment themes, especially capital goods and industrials, manufacturing companies, because somehow, we have a baggage, or you may say that these companies really haven't created so much wealth in the past decade or so, but now, of course, they've come back very strongly in the reckoning. So my focus is only on trying to find these companies, which can benefit from a general upcycle in industrial activity and the economy. And in any case, I think a lot of investors are overweight and overinvested in the classic consumption stories, because that was what worked for the past 10, 15, 20 years or so. So that tilt has to be is very important if you want to keep, at least get the alpha going in your portfolio. So I would say that rather than going for consumption stocks, we have to look for more and more stories, new stories within the capital goods space, the industrials, even commodities, and even companies engaged in infrastructure, energy. I think that's where we should be looking at more closely. I think those could be the far more greater wealth creators and offer better returns than consumption stocks.
Okay, so Deepan, before we let you go, we do want some names, and I'll sort of toss one at you. And we're looking at stories, I mean, old stories that haven't run. And one such name that sort of really comes to mind is Ashok Leyland. Now, numbers in May were very good. CV sales up in double digits, and we haven't seen that in a long, long time, right? And we know that Leyland is one of those stocks that's underperformed for obvious reasons. Do you think that this could be a play, or is it too early to call a bottom and a turnaround in the CV cycle? And if not Leyland, any other names on all the themes that you mentioned, just leave us with one or two.
No, Surabhi, I like your idea. It's a good stock pick.
Okay,
Ashok Leyland.
all right.
I like the story in Ashok Leyland. It's a cyclical business, and in such situations you have to look for cyclical businesses where it is at a down cycle, and certainly CV sales are at a down cycle. And if you're expecting that industrial activity in economy will start to do well, and you're so positive on banks because of that, and I think CVs also should do extremely well. And it's a nice market where there are just 2 or 3 large players. And Ashok Leyland also has got its act really well in order. They're looking at exports. All their new models are very popular. They have closed the gap in terms of market share and quality with their peer group. So, and valuations also attractive, pretty well managed company. So yes, I think it's a great story. One should look at it. It's not a recommendation, but certainly one can explore this stock in greater depth.
Deepan, great conversation. Thank you very much for joining in. We need to slip into a very short break on that note. As we do that, we'll leave you with experts from a conversation that we had with veteran investor Madhu Kela on what he makes of the exit poll impact on the equity markets.
So I think there is a significant opportunity for wealth creation over the next 5 to 10 years. That if you are willing to take, because you are late in the party, if you're a new buyer, if you're an old buyer, the choice is very clear that you have to be staying with the market, and you have to staying with your portfolio, you have to staying with your investment. But if you're a new buyer and wanting to put new money in the market, then, if you look at immediate making money, that is going to be tough because you are coming at 23,000 Nifty, and that's not going to be easy. So if you look at next 3 years, if you start to look at 2026-27 from earning perspective, then you can find a lot of investable ideas. One, financial sector clearly looks like a very, very good risk reward from my perspective.
Welcome back. The Nifty Bank today has hit a new milestone of 50,000. Hormus now joins in to take a look back at the Nifty Bank's journey to 50,000 and the big contributors to this rise. Hormus.
Well, it should have happened last month, but as they say, better late than never. The Nifty Bank has finally hit the mark of 50,000 after falling short by around 25 points last month. And it's been a fairly long journey over the last 6.5 years, which is when the Nifty Bank had first hit the mark of 25,000, and it has doubled from those levels. Now, if we take a look at the milestones, as I mentioned, the Nifty Bank had first hit the level of 25,000 in July of 2017, and it then had to wait for a bit, and it was only in 2019 that it managed to add the next 5,000 points towards 30,000, and then after another prolonged wait of another close to 2 years that the Nifty Bank went up to 35,000. Remember, that was the period when we went to the lows of the COVID-19 pandemic and then recovered from those levels. And by October of 2021, the index managed to reach 40,000, and it is now, after a gap of just over 2 years, is when we have managed to hit that elusive mark of 50,000 on the Nifty Bank. So 6.5 years, the index has managed to double during this time frame. Now, what are the stocks that have contributed to this move? And ICICI Bank is the top contributor there. The stock has more than tripled during this period, 265% returns there. SBI is the second best performer. AU Small Finance Bank, a recent inclusion in the Nifty Bank, but that stock has also doubled over the last 6.5 years. Another one in that list is Axis Bank. HDFC Bank makes an entry here, 71% gains during this period, and Bank of Baroda rounds off the list of gainers. But there are some underperformers during this period as well, and IndusInd Bank is one of them. Punjab National Bank down 16%, and Bandhan Bank, whose shares have halved from those levels. Remember, Bandhan Bank listed in around 2018, but shares have halved from those levels. Now, if you take a look at the point contributors, and ICICI Bank, by virtue of being the top contributor and its weightage on the index, that has contributed almost 40% to that rally from 25 to 50,000. HDFC Bank and SBI contributing around 20%, and Axis and Kotak also chipping in with handy gains. Now, the Nifty Bank had hit 40,000 on October of 2021, and since then it's been PSU banks that have led the rally, along with a combination of private banks, of course, but PSU banks being the dominant force here. Bank of Baroda and PNB almost tripling from October of 2021. Federal Bank is one of those private banks that have done well during this period with gains of around 75%. SBI also makes a list here, the stock making new highs in today's session as well, and IDFC First, the other private bank that has done well. The private banks, the other ones, the larger private banks, are the underperformers in this list, and HDFC Bank makes an entry here, as does Kotak Bank, and Bandhan Bank being the top underperformer from October of 2021. And lastly, the point contributors here as well. ICICI Bank continues to lead the charge during this period as well, 45% of those gains coming from there. SBI, Axis, Bank of Baroda and PNB contributing to the gains as well. Now, that was the list there from October of 2021. The stocks doing well for themselves, and the Nifty Bank has finally managed to hit the mark of 50,000.
All right. Well, that's an interesting sort of journey so far. Hormuz, thanks very much. But, I mean, the journey, it depends on where you are. For some, it could be starting. For others, it could be, a continuation. So we'll find out. Amisha Vora is with us, Chairperson and Managing Director at Prabhudas Leeladhar. Thanks very much, Amisha, for joining us. Good afternoon. Good to have you with us here. The question which people want to understand is, where will they make money from here, Amisha? Right? It's a simple question, but not a simple answer, because the rally today has been very, very strong, very large.
So true.
But do you go with momentum, sort of pile into what is already doing well, look for things which may do well in the future, which kind of has been languishing, and there aren't that many there in that second bucket. So just sort of kick us off on that point, and then we'll dive in.
So, my broader few points here to keep in navigating markets from here on. On economy front, I think that some of the key triggers which can still give further legs to our economy to fire would be, of course, the softening of interest rate, our re-rating, rating upgrade, consolidation of fiscal deficit, which generally in the past we were taking very negatively, that the capex will be constrained. But I still feel that it will be very good capex, but still consolidation of fiscal deficit and huge investments by all the PSUs where possible. In turn, giving huge fillip to manufacturing. Having said this backdrop of where I see the economic triggers coming in from, I feel that markets with maybe 1,000-point further rally will find primary market competing very heavily with secondary market. And despite the fact that we have a very sustained 18-20,000 crore kind of SIP inflows a month, we have very hugely increasing non-institutional participation directly in the markets. And FII is still a joker in the pack whose money is still not coming, finding India costly. I still feel that after a point, markets will consolidate in a range and it will be pick and choose across amongst financials and manufacturing being the two key themes. And still to write this story when the growth is very good and the asset quality will continue to remain good, banking and financials, be it insurance, NBFC, but largely banking, will be a good space to still ride this boom because the rest of the places seems to have been showing a bit of optimism, a little beyond what is reasonable.
Okay.
But yes, we all know India's story is going to be rocking. And rather, I am looking at when and how fast the 7% GDP growth and 7.5% bracket, we surpass and reach that 8.5, 9, which we really deserve as a nation.
Okay, all right. Hi, Amisha. Good afternoon and good to see you in. This is Nigel on this side. I'll just taking a couple of points of what you said, financials with insurance as well and government owned. What comes to mind is LIC. It's been a bit of an underperformer in relative terms. Yes, from the lows it's done well, but from the IPO price, not much. It has valuation comfort. It's government owned as well. What's your view on the stock at around this 1,050, 1,060 level?
After a long time, post-issue when it was just still languishing, and even this year's number in particular are not great. From here on, we feel renewed vigor coming into this, both management and in stock, and we continue to remain very positive on this.
On the manufacturing theme, there are many ways to play it. So which one would be the preferred way? Would it be EMS? Even autos would have an element of manufacturing in it, defense, shipbuilding. And also, the valuations of many of these stocks are quite prohibitive now. So, for instance, Kotak has put out a note where they say that Cochin Shipyard's PE in March of 2019 was about 11 times forward multiple. It now stands at 78 times. Dixon is now at 79 times versus 27 times 5 years ago. And the list is, it's self-explanatory when you look across the board. So how worried are you about the valuations when you make a fresh investment at current levels in manufacturing?
Absolutely, I agree to this point, but I also feel, recently, I did one podcast with Secretary Shipping, Ports and Logistics, and the nitty-gritty with which the plan is made for our shipbuilding, ship repair, ports, and internal waterways have to be developed, and the kind of data points which were ready to unleash that plan suggests that the stocks which are now looking very costly because they are still devoid of the required A, the order book, and B, execution, because execution is not immediate, it is always with a lag. So if one takes a 3 to 5 years view, some of these companies will continue to post 35% plus kind of growth. And that's how they will still generate wealth for investors. But in short term, as what I said, the markets after one more push and a rally will consolidate is what my feeling is. And it will be hugely competitive by primary market and series of issues and sizable issues.
Got it. Amisha, hi. Afternoon. Really take your point. Yeah, perhaps what the market's telling us that it's pricing in not just a cyclical up move in stocks like defense and shipping, but a massive structural change in the way these companies are being run, right? So, and maybe that could explain a 700% move on a Cochin Shipyard. Of course, valuations remain a point of debate. Absolutely get that. I heard you say earlier a 1,000-point move. If I got that correctly, you still think a 1,000-point move on the Nifty is possible, right?
So I feel that, one, we have just come out of what we lost in a worry or uncertainty a bit, but we have not yet given in to the kind of numbers over next 3 months, the kind of order book that I expect across sectors, particularly entirely in the infra space. So I think that yes, 1,000, 2,000, our target has been 24,500, which is possible. And we think that then it should consolidate for a while.
4,500 is target for the present calendar year end, fiscal year end. I mean, what's the time frame for that target?
We said that with third term of Modi, we see this 22,000 or whatever that we touched to be in the vicinity of 24,000-25,000. So yes, it is a yearly target, you can say.
I thought you were going to say 2-week target, 3-week target till the budget.
We have to little feet on the ground.
I'm just joking, but we're in that kind of a market.
Market is in tearing hurry, I know, and they say that there is huge shock being built to hedge the portfolios. But let's see.
Yeah. Amisha, can you share a couple of ideas with our viewers? Because that'll be really helpful. What do you think? I mean, because you have coverage on so many stocks. I mean, you've got one of the widest coverage universe across on the street. What's in absolute return perspective, what looks really good?
Correct. So one thing which is very apparent and coming straight in my eyes is that, shipbuilding will do well, defense will do well, or other manufacturing, like anything to do with solar will do well. Who's going to really fund all these people? It's going to come from financials, as what I said. And if you see in last 1.5 years, re-rating has happened across most of the PSUs, but somehow SBI has not full-fledgedly participated. And I feel that the kind of valuable franchise which SBI is, apart from the fact that digitally they are on the top and some of their subsidiaries are even more valuable, I think that SBI will offer a very good return from here on. One can look at many other PSU banks, but I think that being the largest, it is still got good value. And when it re-rates, it can unfold a good appreciation for investors. So that, of course, is one of the ideas. You all picked up LIC last time and asked me, and I feel that, yes, if they, as informed by the chairman, look at health insurance and the kind of network that they have, they can build a very good franchise even over there. And going further, I keep saying manufacturing, and we all know what has happened to manufacturing. So it will be really tough to pinpoint specific ideas. But on a slightly differentiated way, I would say that I'm not looking at consumer directly, which is also growth will revive, but valuations will not re-rate. But I continue to maintain strong stance on aviation, hotels, hospitals. That is the other way in which now the consumption will be looked at as we increase per capita of our economy. Instead of those basics which we did in last 2 decades of soap and toothpaste, I think we need to move up to this value chain.
I'm glad you picked up SBI, Amisha. Before we let you go, 10 seconds. So you're saying that if I have 100 rupees to invest in the market, it should go to SBI, not to HDFC Bank?
That's a very good question. I also feel, yes, that HDFC Bank has not only underperformed from stock market perspective, but has a very huge opportunity in front of them to cross-sell. But here, one is a very sustained story, which is SBI, and which will unlock While in HDFC, there will be a few milestones that we as investors will keep watching with change in management and a very large organization which needs to just come together, how it is mingling and unfolding. But yes, I also completely agree. HDFC Bank is also a very good investment idea, maybe slightly longer term.
All right. Amisha, thank you very much for joining in. She's gunning for 24,500 on the Nifty, with State Bank of India being one of the top picks. Let's talk about Navin Fluorine. It's surging after the appointment of its new MD. Sonal, this was a big overhang on the stock. And what are the implications of this appointment?
Oh, it was. It was a big overhang on the stock, and finally, after a wait of almost 9 months, there is a final decision on the new MD, and it is Mr. Nitin G. Kulkarni, who will be the MD of Navin Fluorine for next 5 years. This is with effect from 24th June. Now, remember, the MD post is vacant since 15th of December. That was the last day of Mr. Radesh Welling as the MD of the company, and non-appointment of the MD was a big overhang, as I pointed out earlier. Street was also worried because there were other slew of senior level exits that the company saw as well. So that's the reason the stock had been underperforming in the overall specialty chemicals pack as well. Now, Mr. Nitin G. Kulkarni was the executive director at OC Specialty for over a decade, and he has 3 decades of experience across the specialty chemicals value chain, specifically covering CDMO and fluoro specialty chemicals, which are the 2 main segments for Navin Fluorine as well. Previously, the roles involved strategy, business development at Aditya Birla Group, their chemicals business, and at HUL as well in their Lakme brand. He has previously worked with Navin Fluorine as well for a period of 7 years, where he was heading business development. So it is an insider who's coming back to the company and will be taking over as the MD as well. So it removes a big overhang. Of course, we'll have to see which way things go from here on. But the analyst community is also quite bullish on the reappointment of an MD. Now, do remember that Radesh Welling resigned on 29th of September 2023, and stock was down 20% on his resignation day because he was the one who steered capex and growth in the company since his appointment, and the stock is down 12% since 29th September. So this has come in as a relief, but of course we'll have to going forward see what are the changes or some of the strategies he brings about in Navin Fluorine.
Okay, all right, got that. Sonal, thanks very much. Explains the excitement and the up move on the stock. Of course, the market overall is excited, but that's an added trigger for Navin Fluorine. We do have to take another quick break on that note. As we do that, here's a more market opinion that we picked up during the course of the last couple of hours. Listen in to what market veteran Ramdev Agrawal had to say about the exit polls and the impact on the market.
So he has set a goal of 400, up ki baar 400 par. So if by chance actually this happens, all the short sellers, and I think the mood of the nation, and this is one election which is being watched all over the world. It's not only about what we are going to do. This is a proper global event right now, and these things will sink very slowly. And we should not forget other things are also happening, in the sense that your GDP numbers just came day before or something like that, which is way beyond, almost 100 basis points higher than what the economists were saying. So a lot of things are coming together to say that this party which is starting with declaration of result is not going to be over just in a day or two. There could be correction, there could be selling by FIs, whatever. But I think it's a much longer party and larger party. I mean, larger for longer kind of party it is. What are the steps the government is going to do to revive the demand, which is not so widespread right now in the economy? Corporate earnings are there, but it's slowing down. I mean, this quarter itself has come to about 10% or so. So there has to be, finally, because on the multiple side, we are pretty high, almost highest in the world, or maybe second highest in the world after Japan. So we are quite expensive right now, and with the 5-10% move which we are seeing going forward, will make it even more expensive. So we are at 140% to GDP in terms of just the broad number. So what needs to happen is that there has to be a corporate profit boom, and it is anybody's call whether that thing will happen or not. I mean, and what the government can do in terms of fiscal policy and monetary policy, those things will be watched after initial euphoria.
Welcome back. Well, the markets, we just keep climbing. Small intraday dips are getting bought into. Just one stock actually that's underperforming today is Eicher Motors. That one's moved to the low point of the day, but the ones that are doing well, SPI, beautiful looking screen out there. Stock up close to around 9% as we speak. And let's pull up a couple of other notable names as well. Whirlpool, there was a large trade that took place. That stock has spiked up, and Coforge earlier in the day was trading in the red. That's moved into the green as well. But we have Nimesh with us to run us through what's going on in D-Strip Chatter. Well, Nimesh, a lot of people were sitting on the sidelines, waiting for the event to get out of the way. Now people are positioning themselves for the next few years in terms of continuity.
Well, Nigel, I don't think so many people have got a chance to position in today's market. We saw a big gap up, and after that, it's been a very small consolidation that we are seeing, 100 points range on the Nifty, for that matter, even for the Bank Nifty.
Yeah.
But all the three indices are up almost 3%. The Bank Nifty is the biggest gainer of 4%, and that's where the biggest short was. So today's rally to a larger extent is a short covering rally. Look at the biggest gainers, the PSU banks, the PSUs, as well as the banking sector stocks. And all three, I believe there were a lot of shorts in the system, and that's got covered by the larger FIs. That's overall feedback. From a flow perspective, again, it's a mixed day, but there is very selective buying happening in some PSU names, even after the gap up, which some of them are part of my charter list as well. But again, all eyes will be on the election outcome, actual outcome tomorrow. I've been talking to a lot of investors and traders, and there's still a bit of a disbelief on the exit poll numbers. So need to see how things pan out. If the exit poll, if the actual numbers are better than what the exit poll numbers are, what Ramdev said, if it's 400 plus, you will see further legs to this rally, and that will be largely led by the financials. That's overall feedback. But if the numbers are lower than what the exit poll data was, you may see half of this today's move may just easily give up. So that's the feedback as well. So need to see whether the actual numbers do stand out to what the exit poll numbers were as far as the election data is concerned. We spoke about short covering across the PSU names and the capital and the financial stocks. That's played out. The other big theme where a lot of investors are focusing on is the capital market theme. Look at today's big moves outside of the PSUs and all. HDFC, AMC, Birla Sun Life, AMC is up 10%. Motilal Oswal, all the capital market themes have done really well today, and that's one thing which a lot of investors believe that this rally can continue if indeed the numbers are good and the party continues in the capital market. So one big theme is capital market theme, but otherwise across the board there's been largely short covering and very selective buying the PSUs.
Short covering and large cap related names are doing well, because on a day when you have the markets that rally in style, the breadth of the market is 2:1.
Exactly.
It's not mind blowing at 5:1 or something like that, but that was just one observation. What about individual stocks that you're picking up?
That's right. So in terms of individual names, the first stock is Ramco Cements, part of the short covering rally. The stock is up 4%, but there is fresh buying as well at these levels in Ramco Cements. So that's the first name. The second is the two PSU names, NTPC and Power Grid. We spoke about massive short covering rally across PSU names, but both NTPC and Power Grid stands out on back of very strong buying as well. So expect very high delivery based buying in both these names, which is NTPC and Power Grid. The third name is HDFC Life. In a day like today, HDFC Life is marginally under pressure, but there are sell flows. I understand a leading long only fund is an active seller in HDFC Life, and hence that stock has underperformed in a big rally market today. And the last one is Suzlon, locked at 5% upper circuit. There are pending buy orders, and there are large buying as well, is what I understand from larger FIs. And also there is a Morgan Stanley initiating coverage. So that has helped, but there is large buying as well from larger FIs in Suzlon today.
Okay, thank you. Interesting list as always. Kush Bohra is now with us for a few BTST calls. Kush, tomorrow is the real deal, right? The big day. What would your calls be?
Well, staying with the trend, you'd want to be on the long side, but maybe just with a small hedge. So LIC Housing Finance, this stock has, outperformed, was taking support and has shown rebound. I think this momentum will continue. 690, 698 are the two targets to look at. 674 is the stop loss. Ashok Leyland is an ongoing theme. This was, poised for a up move. You're seeing this up move, and I think this is also showing signs of a turnaround and a much higher rally from the current levels as well. So Ashok Leyland also is something that you can consider. 241, 245 are the near-term targets. 233 is where you would place your stop loss. And just as a hedge, just in case of an eventuality, Wipro is still underperforming. Although it's up 1.5%, it's still struggling near the 200-day mark. So we'd want to perhaps consider a short position as well. So Wipro is a short. 435, 421 are the targets, and 455 is where you can place your stop loss. So two long ideas and one short as a hedge.
Okay, all right, Kush, got that. Thank you very much for all of the trading calls. Well, with that, we do also have to take another quick break. But before we hit that break, more market opinion. We caught up with Samir Arora, founder and fund manager at Helios Capital as well, to figure out how he's sizing up these exit polls and how he's gearing up for tomorrow. Take a look.
I think it won't matter beyond maybe plus minus 0.5%. Because the market's main interest was that the same management is there, that sort of the same policies are there, the same thrust is there. Most of the ministers are the same, the railway minister, this minister, the oil and gas ministers. In terms of immediate, which means today, tomorrow, obviously the same stocks do well again. And thank God I have some of these now, these PSUs. But I think beyond that, my favorite sector comes back, which is the financial sector. Financials are related to the economy. They are not like IT or pharma or consumer, even a little bit, which is more, on their own kind of thing and not dependent on government policies and reforms and those kind of things. I think the financial will be for the next step. Today, tomorrow, it will be the same old PSUs and the manufacturing.
Welcome back. Well, let's get to some market opinion. Earlier today, I spoke to Amish Shah, the head of India research at BofA Securities, from the sidelines of the India Conference 2024, and asked him about the exit poll results and also its implications on the market, along with his top sector bets. Let's listen into what he had to tell me.
The capex theme, we went bullish about 3 years back. I continue to believe that these cycles are very long. I think we are just at the end of the 3rd year cycle. We will probably get into the 4th year of a 10-year cycle. I know that the stocks have rallied and it bothers some. I'm not sure. I'm not saying that it is going to be a smooth ride for all stocks.
Yeah.
We ourselves have downgraded a few stocks, but on the cycle per se, I continue to stay extremely bullish. I think there are a lot of sunrise sectors in India on which India has not even started capex yet.
Okay.
But over the next, call it 3-5 years, these are going to become or very big themes. I would not say that everything PSU is good or bad, but broadly speaking, let's say PSU within the financial space, within the defense space, and within the railway space are something where we are still very bullish on.
Okay.
But at the same time, PSUs, let's say within steel, within power utilities, are where we think valuations have run ahead, and maybe there is a need for correction before. The themes are for real.
Yeah.
Even within the power sector, we think India will need a lot of power capex. But I think the stocks have run ahead of delivery.
Yeah.
Execution may falter. If the government kickstarts reforms that we are all been hoping for, then I think with the visibility that these reforms can bring in sustainable economic growth over long term,
yes,
I think there's a reason to believe that valuation multiples can sustain higher for longer. So if you do get a political continuity, and which is a very big if, we will figure it out next tomorrow.
Yeah.
But if you do get that continuity with the mandate that the exit polls are forecasting, I think the pace at which you can now do the policy making can be much rapid.
Okay.
And that I would argue could actually help markets do very well.
Right, that was a view that we got from Bank of America Securities earlier in the course of the day. By the way, the market is sort of trying to make a final attempt towards the 23,300 mark. Remember, we were trading at above that level when the opening gap up happened, and we're trying to go back to it as we're hitting that close. Just 20 points shy of 23,300. Now move continuing on SBI. It's seeing some further upward drift. There's HDFC Bank, Kotak Mahindra Bank, and there's some buying in steel stocks, JSW Steel as well, by the way. So some more adding to the tally. We have Amrish Baliga joining in. Amrish, great to have you on. So lots of analysis. Actually, for us, starting from yesterday, we were live on Sunday as well. But you tell us, the consensus is that you need to be in capex, manufacturing themes. Give us some ideas, some picks, some stocks that perhaps that you would work with now.
The pick which I have today is from this space, Action Construction Equipment. It's leading material handling and equipment company with a production of about 1,000 custom units and 9 tractors.
Oh, okay, Amrish, I think we have a little bit of a trouble with your line. We'll try and get you back. Action Construction Equipment, ACE. That's the stock that Amrish was talking about. And of course, we were in conversation with the ACE management not too long back, just after their Q4 numbers, sounding extremely confident of at least growing the top line by 15-20%, if not more. That's the stock. Pull up a 1 year on ACE. Stock has been doing well as well. And they're expecting further leg up as more construction activity picks up, as mining activity gains further momentum. Good mover, 200% up already. Amrish, if you can hear me now, yes, your rationale on buying ACE at these levels and how the valuations look. Oh, okay. I don't think we have him through just yet. But let's do one thing. Speaking of this theme, we were in conversation with the market veteran Atul Suri. He actually named not one but 5 themes that one must be in from a medium-term perspective as you're looking to ride this big wave on manufacturing and the strong outlook for the economy.
The areas that will really stand out is that I think there's going to be a lot on the electric vehicle side. Of course, Tesla is going to be a poster child, and the question is going to be, will they come now or later? But irrespective of that, I think electric vehicles will be a very big theme. There'll be a lot of push out there. Green energy, another area that I think is going to see a lot of government policy initiatives in the next 125 days. I think there's going to be a lot of clarification on the e-commerce side, especially the taxation side. So I feel there is going to be a lot of government clarity or thrust in those areas. So these 3 sectors, I think, will be what you should look for. I think that there's going to be a lot of focus on 10 new cities for manufacturing. So the whole industrial activity or the industrial stocks or the capital goods and engineering, I think will continue to sort of benefit from it. Another thing they've been talking about is digitization of land records. I think that this will be a game changer for the real estate sector. What demonetization did to financials, I think this digitization of land records will do to the real estate sector. Shipping and logistics, that's another area the government has been talking about. So these are the 5 key themes that I think will matter.
Okay, that was Atul earlier with a couple of ideas. Just some more names that are coming up on the mix. It's still the same class. We're talking about PSUs. NTPC, phenomenal day for the stock, 9% higher. ONGC is charging about 8%. IOC, BEL, PFC, REC, Power Finance, it's just across the board. Doesn't matter what PSU stock you're looking at. And folks, the other theme of the day has been Adani, right? The Adani group is still going all guns blazing. Ports, power. Adani Power is up 16%. Ports is up about 10%. So that hasn't changed either.
Absolutely. These are really big gains. And, we sort of spoke about this pre-market along with, PSUs and the entire sort of capital goods space, etc. I mean, the one sort of sector or rather cohort of stocks which was expected to do well is, of course, Adani, and it's performing very, very well. I think Amrish is back with us. Amrish, I think we're able to come to you now. Action Construction is your idea, right? You want to run us through that one quickly? By the way, Surabhi and Rima spoke to Action Construction, Saurabh, a few weeks ago, and he said that next 5 years, revenue should be up 3x, if I got those numbers right.
It's possible, he said.
He said it's possible. Go on.
In fact, the management is talking of 3x of the current top line in the next 5 years, which means it's about 7,500 crores. And they're also talking in terms of inorganic growth by acquisition, which I think should happen decently soon. I mean, they're again talking of Q2 or Q3. And I mean, look at the market. India is now the third largest construction equipment market, and we have, I mean, ACE products also being supplied to Middle East, Asia, Africa, and Latin America. Look at the Q4 numbers. I mean, a very strong quarter. I mean, they had a revenue growth of 36%, EBITDA growth of about 77%. And they've also introduced electric cranes. I mean, that's a new sort of a segment they've introduced. So basically, future ready. So looking at the way the top line is going to grow over the next few years for FY26, in fact, I have an EPS target of 46, and with that, the target price becomes 1840.
You know, the management had also said that, you know, for FY24, they were earlier targeting a 2,500 kind of top line. They ultimately ended with 2,900. So it turned out to be much better than what they had earlier anticipated. And just on that word of Adani Group stocks, Hormuz was telling me that the entire market capitalization of the Adani Group stocks today with the up move stands at about 20 lakh crore, which compares with the low of 7 lakh crore that it hit post the Hindenburg report being out, but it's still not back to its heyday levels. At that time, the market cap of the entire Adani Group stocks was about 24 lakh crore. This was, Hormuz's data that he put out earlier today. But we are wrapping up the Nifty at 23,300, a solid 770-point gain on the Nifty, 3.5% up move on the benchmark indices, mid-caps moving in step. Though the advanced decline ratio, perhaps you could have wanted for a little bit more, 2:1 on the advanced decline ratio. Sectorally, PSUs did well. So while the Nifty Bank ended with a gain of about 4.5%, the PSU banking index was up 8.6%. State Bank of India was the big star, but outside of that, even a Bank of Baroda, IOB did well. Adani Group stocks, Adani Ports being the top Nifty gainer, and other PSUs. So NTPC, Power Grid, ONGC, PFC, REC across the board, and you had some big, 8-10% kind of up moves.
Absolutely. I mean, all kinds of stocks. I mean, GAIL is up 13%, for instance. I'm trying to see names which are not Adani and not PSU, and they've managed to find takers. Tube Investments would be one of them, about 8% up on that stock. Concor has had a good session, about 9.5%, but again, trying to go beyond, deeper into the private sector space. Let's see what else is work. IRB, 10.5% on the higher side, is a name that really stands out. I'm actually failing. It's EIL, it's Canara Bank, it's Central Bank of India, UCO Bank. So no, trying to find non-PSU names, but not too much luck with that.
8% on the index itself, right? So it's just staggering, the gains here. But CG Power, if sort of go outside the PSU space, CG Power was up 7%. Stock's almost at $700 now. Nazara was up 12%, and these are all stuff with very good volumes, by the way. So it's actually a very long list of names. Religare was up 7%. Motilal Oswal was up 7%. What else? Skipper was up 9%. And it's a big volume day, mind you. I mean, that much, I think it's very clear just looking at the screen here. Shriram Finance up 7%. Shriram Finance, of course, is now a Nifty stock. NCC was up 8.5%. LIC Housing Finance was up about 7.5%. Prestige Estates was up 8.5%. So, just as Surabhi said, trying to find stuff outside of the PSU. And they're not there in terms of the biggest volume sort of gainers, net gainers, but very much part of the mix today with what went on. So we started with an 800-point pop, and the market ends with 776 points in gain. So, this is just incredible. Almost at the day's highest point, back at the day's highest point. So the market is going into the actual results. Of course, I think, you'll get a chance to react. Actual numbers will start to come in from 8 o'clock in the morning. Markets will start at 9:15, and it'll all be clear by hopefully 10:30, 11 o'clock. So, so you get a chance to kind of react to which way things are going. But as of now, market's gone all in, sort of believing what the exit poll numbers are really showing.
Absolutely. Even, the thing with today was there was no intraday dip whatsoever, no volatility. Started 800 up, is ending practically 800 points up. But I think that's where it's curtains on this edition of Closing Bell. Thank you very much for being with us. But Markets Forward will bring you more of today's market action.